Hey, what's going on everyone? It's Griffin here, and as always, I hope you're having a great day. Now, in today's video, we're going to be doing a part 2 to the overrated, underrated video series that I started a week or two ago on the channel. Essentially, I asked the Instagram audience to submit some various different topics. It can be stocks or pretty much any other financial or non-financial topic that you want me to feature in a video. That's exactly what I did a day or so ago. So in today's video, I'm going to be ringing through a bunch of them. My girlfriend Sophie's going to be ringing through them, and I'm going to say whether or not I think it's overrated or underrated based on qualitative and quantitative elements. Do keep in mind that this is not an in-depth video about various different stock analysis or whatnot. This is just kind of a lighthearted video where I'm providing some off the top of my head information about my take on the stock. So I really hope you enjoyed today's video. If you do, smash the like button and also check out the links down below to resources I use and recommend. So with that said, let's get right into the first one.
Voyager Digital.
All right, Voyager Digital, for those of you who aren't aware, is a platform where you can buy and sell digital currencies, basically cryptocurrencies, and this platform will scour all the different exchanges and get the best rate for you when you want to buy or sell the assets on their platform. And you can also deposit your Bitcoin or other coins into this platform, and it'll offer some high interest, kind of like a high interest savings account, but for your crypto. That's basically the gist of this company. So I'm going to say that the actual company itself is underrated in the bigger picture because more and more we're going to be utilizing digital currency in our everyday lives. We're still far out in my opinion, but in the larger picture, I think it's underrated. Now, the actual stock itself, I do have quite a few buddies who are really bullish on this company, and look, I'm going to say it's properly rated. Reason being, I can't go ahead and say it's underrated, a stock that's shot up 600% in value over a couple months, right? Will we see some massive appreciation over the longer term for this company, probably to the $60 range? Yeah, most likely. So I'm going to still say that it's properly rated as of right now based on all that info.
Hain Celestial.
All right, Hain Celestial, not really a company I know all that much about. Pretty much one of the only things I do know about them is that the founder of that company is now the CEO of Afria, which I am a shareholder in. It's a company that I'm pretty sure they offer health products as well as some other different like soups and stuff. I'm pretty sure I've seen their logo on some soups. Not a company I'm really interested in, to be honest. I'm going to go with properly rated because I don't know all that much about them. I quickly looked at their financials and stuff. They seem to have pretty steady and growing financials in terms of their revenues or whatnot. But yeah, I'm going to go with properly rated for now.
Facebook.
Facebook is slightly underrated. Reason being, it's been trending sideways, their stock that is, for the better part of 6 months. I recently just bought in, and I'll tell you why. The stock is constantly under fire in the media, and there seems to be short-term repercussions in their market value as a result. But the reality is that there's only going to be an ever-increasing amount of ad spend from big companies specifically towards social media. And Google, along with Facebook, that owns multiple different platforms, such as Instagram, WhatsApp, as well as a couple others, is going to be, or is very much, one of the largest players in this space, and I only see an ever-increasing amount of spend towards these companies in the future. So yeah, I recently opened up a position at around 270. Pretty sure it's trading now for around 300, and so for this reason, that's why I'm putting it at slightly underrated. But Facebook is, like, their advertising model is just an absolute beast, and yeah, I think this is a great company for most portfolios.
CloudMD.
CloudMD is also a company that I'm going to put at underrated. So if you're a subscriber to the channel and you've watched my videos over the past couple of months, most likely you've heard me speak about CloudMD. But the reason why I am bullish on this company, and I've mentioned it so many times, is that they're a telemedicine company up here in Canada. Yes, they're doing massive acquisitions, and so for this reason, they're diluting shareholder value, which I'll be honest is something that typically is not beneficial for current shareholders. And over the past couple of months, we've seen the stock just tumbling down further and further, and I've had a lot of viewers asking me what the heck's going on and why their investment is dropping in value. But let me just say that I'm right there with you. My position is pretty much back to par with my entry price when I first bought into the company. But the reason why I'm not selling is because, like I've mentioned just so many times on the channel, I am so bullish on telemedicine's growth over the coming 5 to 10 years, and I think that that's one of the main problems right now in the retail investor community, at least on Facebook, as well as like Facebook groups. I meant to say on YouTube, but A lot of newer investors are getting in to make 20, 30, 100% returns in a month or so, but that's just not realistic when you're investing into a company that's operating in an industry that is seeing massive disruption. I'm holding on to my shares, and for this reason, I'm going to go with slightly underrated because yes, there has been a lot of hype around telemedicine, so I can't go ahead and say it's fully underrated, but I'm just holding on for the longer term growth of this industry and this company. I also own Well Health as well as TDoc, which are my three main plays in the telemedicine space.
FLT Drone Deliveries.
Okay, drone delivery is another industry that I think is massively underrated in the bigger picture, right? Once again, this is an industry that is pretty much brand new. As of right now, when you want to ship a package from a company or to a user or user to user or company to company, we need delivery trucks or we need, let's say, Amazon drivers. This is a company that's going to allow companies to ship their packages directly to someone's door, basically cutting out the middleman. And so for this reason, I think it's massively underrated. We're going to see a lot more drone deliveries over the coming years, as well as even drone taxis or whatnot. I'm reading this book called The Future is Faster Than You Think that I was talking about in my last video, and I was just blown away at how this technology is already here. We're only a couple of years out from wider scale adoption. Now, in terms of FLT specifically, the stock, yes, we saw a massive run up over the past couple of months, and since then a sell off continuously to the price point that it's sitting at right now. Again though, right, retail investors getting in for quick short-term gains, you really need to ask yourself, well, why am I investing in this company in the first place? Is it just FOMO for getting in and making a quick profit, or you actually believe in the industry? At the price point it's selling at right now, I'm going to say underrated, and I think that if you're looking to hold on for a couple of years down the road, this is an industry that's going to see massive disruption as well as adoption, which will lead to companies operating in the industry seeing appreciation in their value. So yeah, underrated for FLT.
Fortis Incorporated.
Fortis Incorporated, properly rated. It's a great Canadian dividend stock. Most of you are aware of it because I have spoken about it quite a bit on the channel. They have a decent dividend yield at, I think it's 3.8% right now, which is great for any Canadian focused dividend portfolio. They're one of Canada's main utilities provider, and so for this reason, they have quite steady cash flows as well as reoccurring revenue because everyone needs utilities. So yeah, I'm going to say it is properly rated because only a couple months back, a year or so ago, the value had dropped down significantly, and since then it has recovered to a level that I think is fair for this stock and this company's quality. RK doesn't really need all that much introduction. It is the disruptive innovation ETF offered by ARK Invest. I've spoken about it a few times on the channel over the past couple of months, and most of you are already well aware of what this ETF is and what they offer. For those of you who don't really know though, they offer, or they hold, that is, some companies like Tesla, Roku, as well as other companies that Cathie Wood, who is the fund manager, thinks are going to be very disruptive and appreciate over time as a result of their dominance in their respective industries. Now, I'm going to go ahead and say that it is overrated just from the sheer amount of attention that's been brought to these funds over the past couple of months. I'm still a shareholder myself, and I did buy some more shares during the recent dip. I'm pretty sure it went down in value around 30%, which is pretty significant considering the fact that the S&P 500 hardly even budged during this same period of time, and really just showcases how much capital was allocated towards big tech and disruptive innovation that we saw a rotation out of. But regardless, I still think it's going to be a great ETF to hold long term, but for these reasons, I do still think it is slightly overrated from an objective standpoint.
Okay, ready?
Yeah.
Fans.
All right, fans, this is actually a ticker symbol, FANS, and it is a relatively small company up here in Canada that offers digital sports betting. I don't really know all that much about this company in particular, so I'm going to say properly rated. I looked quickly at their financials, which there are very little of, and their stock price did shoot up in value around 300% over the past couple of months. But again, I don't really know all that much about the company. However, the industry it operates in, I think, is underrated. The reason being that sports sports betting has been illegal in most states across the United States. Yeah, you didn't know that, eh? But yeah, most states across the United States, even in Canada, it's something that hasn't really been tolerated over the past couple of years. But now this is an industry that's at the cusp of massive expansion, and there's a lot of people like to bet and gamble, especially on sports. So yeah, I think that this industry is also underrated. However, do keep in mind that it's something that if you want to see some longer term gains, like you can't expect to get in here and see a couple 100% return once again in a very short time frame. I would say if you are interested in investing in this industry, I would only allocate a really small portion of your portfolio and maintain the position, most likely for a couple of years out. But again, you need to tailor this to your own situation.
Canadian Pacific Railways.
All right, Canadian Pacific Railways, ticker symbol CP up here in Canada. For those of you who aren't aware, this is a company that has an extensive network of railroads for distribution of goods across the North American continent. It's an industrial stock, and I don't really speak about industrials all too often on the channel. I'm going to say it's properly rated, just reason being, it's a very solid stock to have in your portfolio if you do want to diversify a little bit out of other sectors that are a bit more growth oriented and speculative plays, like for example big tech, as well as some other industries that we speak about on the channel. However, this stock has appreciated quite a bit in value over the past couple of years, so that's why I'm saying it is properly rated. They also have a dividend it's okay, but it's under 1%, so it's nothing game changer to a dividend portfolio. So yeah, I'm going to say it is properly rated.
Alibaba.
All right, Alibaba, ticker symbol BABA or BABA. It's a Chinese company that offers e-commerce. They're basically kind of like the Amazon of China. I'm going to go ahead and say that it is underrated based on the share price right now. I know some investors are not comfortable investing in Chinese companies for political reasons and other things that we're not going to speak about right now. But yeah, I just think that as an actual play for someone who wants to get in on this company right now at current price points, I think it's underrated in relation to the financial growth of this company long term and really what they're bringing to the e-commerce space. It should not be of a surprise to anyone that I'm very bullish on e-commerce over the next 5 to 10 years. And this is one of the largest competitors to Amazon over in the Chinese market. Oh, and actually I was going to even include Alibaba in my last videos talking about 4 stocks to watch in April. I had a 5th one, which was this company, but I chose to leave it out right now just because I was waiting to see how the stock was going to trend over the coming weeks, but I might even feature it in an upcoming mid-April stock pick video. So yeah, underrated for Alibaba.
EQB.
All right, EQB is the ticker symbol for Equitable Bank, which is basically an alternative banking company outside of the big 5 up here in Canada. I think it is properly rated. It's a company I spoke about probably around 6 months ago on the channel, and since then it has appreciated quite a bit, but I still think it's a good play if you want some diversity outside of the typical financial companies that we speak about on this channel, and as well as just in Canada in general. They also have growing financials as well as a good range of products. So yeah, I'm going to say it is properly rated.
Bombardier.
Bombardier, I don't even know what the ticker symbol is for this company, but I would not invest in it. And for this reason, I can't even put a rating of underrated, overrated, or properly rated because it's none of the above, really. As a Quebec resident, my tax dollars have contributed to bailing out this company more than once. And over the years, the Quebec government has bailed out Bombardier several times. And I think everyone that comes from Quebec can attest to the fact that as an investment, this would not be an opportune investment in terms of everything, opportunity cost, or just the future value of your capital injected into this company. So no, I'm going to say, well, yeah, I can't even say whether or not it's a rating. I would not invest in this company.
Palantir.
Okay, Palantir, ticker symbol PLTR. I'm going to go ahead and say right off the bat that I think it is overrated, even considering the fact that the share value has dropped down dramatically over the past month or so. And I know a lot of larger firms like ARK Invest and a couple other YouTubers have spoken about or have done an analysis on the company and mentioned that it was an opportune time to buy. I would tend to somewhat agree with this based on price patterns that we've been seeing and resistance lines for this company. But the reason why I'm saying it is overrated is just from the sheer amount of attention that's been brought to this company over the past couple of months after they came public, which dramatically shot up share value. And I think a lot of retail investors got in based exclusively on FOMO and the idea that they were going to make a lot of money in the short term on this company, which many people did, but a lot of people are also holding the bag right now. I think the actual company, what they're about and what they're developing as a product is really innovative and will do tremendously well over time because they're bringing an amazing amount of value to big businesses as well as governments, allowing them to synthesize their data and find trends that will help them streamline their operations and basically make more money. So the company itself, I think, is great and will do well over time. And for this reason, it's going to ripple on over into share prices as well. But just from an actual, stock hype perspective, I think it's been overrated. And I think right now, if you're looking to open up a position, it could be a nice price point above at around $20 per share. But do keep in mind that I would only buy in right now if you are looking to hold on for a couple of years minimum, because this is the type of company that's increasingly making more money from reoccurring revenue on their government contracts and big business contracts. So yeah, I'm going to say it is somewhat overrated / properly rated based on the price point right now.
Nicola.
It's not a Ricola, Nicola.
Nicola?
Yeah.
Okay, ready?
Yeah.
Nicola.
Okay, regardless of how the name was pronounced, I think everyone here knows what we're talking about. It is the electric vehicle company that was going to make electric semi trucks to go and compete with Tesla. I'm going to say this company is... Here's the thing, I can't really say it's overrated because right now any hype has basically fizzled away for this company. However, I'm still going to say it's overrated just because, I would not invest in this company or anything. From the get-go, they've been a company that has not made any fiscal sense, and basically it just shot up in value. Their stock that is based on complete FOMO and a hype around the company. Even, I'm pretty sure I saw in the news a day or so ago that the founder and CEO just sold off over $50 million worth of stock, of his own personal stock. So yeah, I would not be investing in this company. I think there are other EV plays that are a lot more promising. Even Tesla at these price points, I think, is a much better investment. All right, so that pretty much wraps it up for today's video on overrated or underrated financial topics. Pretty much all stocks in today's video, but I really hope you enjoyed it. If you did, make sure to drop a like. It really helps the channel out. And if you want to see a part 3 to this video, make sure to let me know down in the comments, and I'll probably be doing this near the end of the month or early next month. So yeah, with that said, make sure to check out all the links down in the description to resources I use and recommend, like some online stock brokerages where you can get some free money for opening and funding an account, as well as some other resources. So on that note, thanks a lot for watching today's video, and I will see you in the next one.